If you lose your mind during this period, you will lose everything that you made, and you will even see your accounts move into drawdowns. So this is exactly where you don't want to be. And the easiest way to do that. So, what should you really do if you're facing low volume conditions? Markets are not moving clearly. They are not respecting your level speed your race. You can't see what's the main draw on liquidity, and price is just chopping around. So, what we are seeing right now is this exact type of delivery here on the euro dollar, on dollar index, and other markets. One of the most important parts to remember is that every market moves in cycles. What exactly I'm talking about is the same way that we always see price move from impulse to pullback or correction to another impulse, another correction or pullback, another impulse. So this type of delivery is just regular market nature. Markets move from very impulsive conditions as well as very choppy and hard to read market developments, market conditions when the whole probabilities of your trades playing out are not on your side and so on. So now the main mistake I see traders make is make profits during these type of conditions when markets moving nicely, when everything is aligning well. Lower time frames, higher time frames, execution time frames, everything is moving in sync. Your strategy and edge that you have over the market is playing out to perfection. And this is where traders make profits. But what most fail to do is when this switch happens from clear and impulsive market conditions, moving towards clear draw on liquidity, then everything is moving in sync. Then price shifts into this type of condition right here. What most traders do, they lose most of the profits that they made during these type of conditions right here. And this is their trading cycle. If you would look at profits and time right here, what they usually do is see graph going to the upside. They get very excited. Some of traders even get too overly excited, and even in good conditions right here, what they start doing is over trading. They become too confident in their strategy and so on, starting to take average trades, and this is obviously then they pull back to break even. And then when market switches into a bit chalky market conditions, when the whole delivery and alignment is not that clear, most of those traders dive right into the drawdown. What happens after that? Obviously, price moves back to good conditions right here. They start seeing some progress right here. They start making some profits, covering some of this drawdown that they faced, and then they fall back right into the same cycle. As soon as market shifts into conditions that are not allowing them to see clear alignment, clear drawn liquidity, they start being impatient and they start taking average setups again. And this is then they face another lower low in their progress right here. So remember that for most traders, it's a mix of fear of missing out, not having a clear plan, not really knowing their system, the numbers behind their system. They don't have data. They are not backtesting, live testing. So these are some of the main factors causing traders to lose money. One of them is fear of missing out. That usually comes in these type of phases right here, red zones, when they don't see their strategy perform well. What most of traders do, they go to either YouTube or Instagram. They see other traders take trades. They are not aware of the fact that all of that just simply moves them out of balance. And instead of focusing on their own strategy, their own trading curve, they simply start feeling frustrated, they start feeling anxious, and what they do from that point, they start taking mediocre average trades. And this is what happens right here. Instead of seeing their strategy move with good market conditions and seeing a slight pullback, once the shift happens into a bit more complicated market conditions, instead of seeing a nice move to the upside and just facing a pullback, sitting patient until price moves into a good cycle that aligns well with their market strategy and seeing another push to the upside in their curve, what they do instead, they start chasing trades. They feel frustrated. They can't sit on their hands. They simply don't have enough experience to understand that markets move in cycles again, from good conditions to complicated conditions, from good conditions to complicated conditions. So this is where you make money, and this is where you don't lose money. That is the goal of professional trading. As soon as you realize that you're moving in low probability environment, this is where you want to cap risk, and this is where you don't want to expose yourself to facing a major drawdown and losing everything that you made in good market conditions right here. So again, this is where you make money, and this is where you do everything to not lose money that you made right here. And then conditions shift back to clear delivery. This is where you make money again. So this is the main thing and the main part that you must understand in your trading. And this is where I would highly suggest to not let let other traders move you off balance, thinking that out of a sudden everyone is just making money around you and it is just you losing money in silence, thinking that everyone is just winning, taking 20 trades a week, winning them all, and so on. So simply just limit on how much you look outside your trading, outside people that you trade the same strategy with. Stay disciplined, stay focused. Don't let your frustration and emotions move you off balance, and just learn to sit on your hands and always remind yourself that actual trading is 99% waiting and only 1% executing. So it's a game of patience. It's a game of understanding what market cycle you're trading in. Is edge on your side or not? Are you moving in high probability environment or low probability environment? Then you're moving in high probability environment. Your focus is to be patient and take good trades to make the most out of it. And then market shifts into this condition right here. Your job is to not lose that money that you just made right here. Another thing that obviously I talked about a million times already is not having a clear plan. So no matter in what conditions you are moving in, if everything is just based on discretion and you don't really know what you're looking for, everything is simply going to be all over the place. And this is not the video where I want to talk about that. We talked about this specific point quite a few times already. Now, not being aware of the market cycles, this is what we already covered. Fake confidence after a winning streak, this is what I mentioned in the beginning of the video right here. Your traders face drawdowns right away. And trust me, it is more common than you think. When everything aligns and someone, let's say, starts a new trading account or something like that and jumps right into a good market period like that for their strategy, they follow their plan to the T, they see a nice growth, and then they simply get sloppy. They get overconfident, they start over trading, they start thinking they're the king of the market and everything that they do is going to turn into gold. And this is then obviously they lose all of this right here. Then what happens after that? They think, okay, I just made some mistakes. They recognize the mistakes that they made and they think that now I will start trading like this again right here. But what they are usually not aware of is that all the profits that they made right here, they're during high probability environment. But if after this losing streak caused by overconfidence, taking mediocre trades, coming to the end right here of the good market cycle, and they move into bad market cycle, which is again something that's simply out of our control. This is no matter if they really follow their plan to the T or not. This is where after this type of a cycle, they will start seeing their curve move into drawdown. So what I really want to highlight is that not only you want to not lose money during cycles like that, and trust me, of course you will lose some money during these type of market conditions. It's really impossible to just trade here, skip everything right here in the middle and jump back to good market conditions. You will have to face at least something before realizing that we are moving in bad market conditions. Then you skip this part right here and jump back to good market conditions. So what happens in your curve? You see a nice growth, some pullbacks, and then you continue pushing to the upside. This part right here usually takes some time, of where you just simply want to be patient, sitting on your hands, waiting for price to turn back into good high probability environment. So fifth point right here, forcing trades is what happens usually in these hardly readable market conditions, exactly what we have here on Euro right now, and exactly obviously what we saw around Easter holidays right here. So trading is not easy. I think all of you already know that. There are many factors where you could lose during good environments if you are not experienced enough and you start getting overconfident and start taking mediocre trades, again thinking that you are king of the market and everything that you touch will turn into gold. Trust me, what you will only do is after seeing a winning streak, you will pull back right here, and once it shifts from good market conditions into bad market conditions, you will just keep on seeing your account going into drawdown, and this is where everything will get only more complicated from there. Know your system inside out. Stick with people who are trading all your strategy. Don't let outside noise, Instagram stories and all of that move you off balance, thinking that you're in some way wasting time when you're waiting for clear market opportunities, for A+ trades, etc. Every single strategy faces these cycles right here, as well as every market. For some scalp traders, is the complete opposite. When market is expanding, this is where they lose money. When market is corrective, like right here, this is where they make money, etc. So if you're trading and you want clear delivery and here you make money and then market shifts into this choppy behavior and you go to Instagram after not seeing a clear opportunity for a few days or a week or even 2 weeks and see other traders win money, what often traders do is without even realizing that probably those traders are simply not being honest of what they are doing in the first place. What happens to most traders? They get frustrated, they get anxious, they think that they're wasting time, they think that they are not doing enough, etc. And this this is when they start forcing trades. Then for them in that phase, their job is to not lose money. When to trade and when not to trade is equally important to know, because no matter how good you perform right here, if you lose your mind during this period, you will lose everything that you made, and you will even see your accounts move into drawdowns. So this is exactly where you don't want to be. And the easiest way to do that is having a clear plan, is knowing what you're looking for, is knowing your system inside out, is having data behind it, is having clear numbers, and simply letting the market do its thing. Then it's chopping around, you ignore it, then it starts moving nicely in sync. There's clear top-down alignment, clear targets, you start riding the wave again. And this is how you eventually see a nice curve to the upside on your accounts. And I assume that this is the goal for every single trader. So if you're currently in this phase right here, I hope this video will help you a little bit to understand the bigger picture, where you're at, what puzzle pieces you're probably missing right now, and so on. So I will wrap the video right here. I hope it was helpful, and we will talk very soon.